What is asset allocation?
Asset classes are five only. It's in real estate. Second is a commodity. Third is a majority in equity. So fixed deposits. Fifth asset class is a cash.
As per the SEBI's study also, that most of the people in equity markets, especially in F&O trades, are losing money.
If market collapse, equity goes down almost 30 to 50%. As you progress your near goal, that you shift risk asset class to fixed asset class.
What are the top 5 suggestions that you have for again the same person?
20 to 30% of their income should go for saving, and whenever you do investment, set a goal and then only invest. Avoid buying homes at early stage due to pressure. If you are making good money, have a SIP.
When should he go for equity? When should he not go for equity? What is that age gap? What are the parameters that you typically assess while doing that financial planning?
So when you start early, 5 years at least before or 3 years before, they should come into the fixed asset class.
Welcome back Nitin sir. Thank you again. परत एकदा thank you हे करण्यासाठी. This time what we will try to do is dive deeper into financial planning process and asset allocation especially, to educate the consumers there so that they also understand which are the types of asset allocations, what is the best strategy for them to go into the asset allocation, and what are different asset classes also. We will try to dive into that, and definitely to end it with a kind of a giving them something, we will try to talk about what are the top 5 suggestions that you have for the young audience today. So we'll start, and so basically want to understand from you, with your vast experience of planning, financial planning and asset allocation for 150 plus families for last 15 years, is that first is what is asset allocation and why typically asset allocation is extremely important in terms of goal based financial planning. So what is it that?
Okay, fantastic, and thank you bringing on the platform of Spring Money. So first understand the asset, what are the asset classes are there. So mainly worldwidely major asset classes are 5 only. First is normally people are seeing, that is in real estate. Second is a commodity. Commodity have a different asset classes: gold, silver, copper or crude oil. Real estate also may have a different asset class like commercial property, normal plot, flat. So every asset class there are sub types of asset classes. Third is a majority in equity. So equity comes in large cap equity, startup equity, own business equity. So this is equity is a third asset class. Fourth is a fixed deposits, where people get a fixed kind of returns. That can be FD, that can be a LIC bond or corporate bonds, is a fixed FD. Then when it comes, fifth asset class is a cash. That cash we carry, cash at bank, cash at home, that is a fifth asset class. And there are other asset classes are emerged right few years back, or there are old, but that not prevently used for the you called as a immediate exchange of money. Take an example of cryptocurrency is one asset class emerged recently few years back. The antique coins, paintings, these are the asset classes. But in India, you can't be retired on having paintings and you take a retirement. But definitely, it's one of the asset class people are used. So majority 5 asset classes people invest, and people should invest. So assets. Once we got asset, what is meant by assets? Now you have to do allocation in the assets. That is called as asset allocation. So goal based asset allocation. So goal based asset allocation, why it is important? So every goal there is a timeline. Okay, and that timeline is different asset classes perform at a different level. So take an example, real estate. If you are investing in 3 major asset classes, that is real estate, commodity and equity, these are the volatile asset classes. You can't guarantee that this asset class give you this much return, but that asset class ensure you they beat the inflation. Okay. And the other 2 asset classes like fixed deposits and cash, they cannot beat inflation, but they give you assurity. You get a guaranteed money at whenever you require.
Okay.
So what helps in the help of asset allocation and goal-wise asset allocation? So you first understand what are the goals. So what are the typically goals people have? Take an example. If you are investing for the emergency purpose, you can't invest in the real estate or gold or commodity or equity. You have to invest in the cash or fixed deposits. So it changes. So take an example. You are investing for your retirement purpose. So you can invest in the equity. You can invest in the property. You can invest in the commodity. So that is there. So as goal changes, asset allocation change.
Fantastic.
Okay, where the importance comes of an advisor. Normally, people have some own beliefs in their investing. So some of people have belief in the real estate. They make huge money in the real estate. They consistently invest in the real estate. So as they go nearest their goal, they still investing in the real estate. Same happens with the equity. People get money in the equity, they think that equity is the only asset class give more return, and as they grow near their goal of, take an example of retirement, at a 50 they want to take a retirement, and now they are at 2024 and they want to retire next year. If market collapse, equity goes down almost 30 to 50%. Whatever the retirement corpus they have currently, they maybe go 50%. So if this happens, they have to postpone their retirement. So this should not be happen. That is why the asset allocation play important role. So if you are taking retirement at 2025, you have to plan 5 years plan ki whatever money that is placed in the equity or a risk asset class, which is a equity, commodity and real estate, you have to shift that asset class to fixed asset class, which ensure guarantee whenever you require retirement, as we discussed in the example of in 2025, you assure that money get in the hands of the
you have that money. Basically, yes.
So that ensures asset allocation, that ensures a goal based planning, that ensures because of financial planning. So where advisor role become a crucial to having a progressive asset allocation. As you progress your near goal, that you shift risk asset class to fixed asset class.
So that looks like very important lesson, because as you rightly said, we have some very critical goals to achieve. Whether it is, let's say for example, as you said, retirement is one of the critical goals, or even if I have a child education as my critical goal, in that seems that progressive asset allocation is one of those strategies which will ensure that as a financial able person, I have all my money required for that goal already into my bank account, so that I am having a peace of mind to get to that goal, which is a fantastic thing. Because as you rightly said, many a times we also see a lot of feedback, or we also talk to customers and we understand that people invest into higher returning assets but do not understand that they also are much more volatile. So when your goal is near to completion, you should not have that much amount into the volatile assets. You should actually park it into maybe something which is giving you slightly lesser returns but has a assurance that you will get that money.
And absolutely, and there is a study in the US market, because the US market is more mature than us. So there is a Dalbar study happens in this of how many people make money in the equity market. So only 3 to 5% people are making whatever the market given the return. So take an example, market have performed 12 year over the period of 20 years, but only 4 to 5% only make that kind of return because of this behavior challenges happens in the terms of investment management.
So even you are saying that only 4 to 5% of the people are even able to get the market size returns, which are typically 12% in the US.
Yes.
Yeah, that is a very reality in India also, looks like. As it is famously said, even as per the SEBI's study also, that most of the people in equity markets, especially in F&O trades, are losing money. But I think, as you rightly said, people should definitely go for this kind of asset allocation first, rather than only sticking to equity markets as the only asset class.
Or any asset class which is a volatile and which is not giving an assured return. So it may be real estate, it may be a commodity, it may be a equity.
Yes, absolutely. Now going slightly deeper into asset allocation, as you correctly explained that there are so many asset allocations and a progressive asset allocation. Can you elaborate slightly onto the, let's say, retirement as a goal and how one should plan when, let's say, someone is at 30 years of age today and wants to retire at 50? What should be kind of a progressive asset allocation that you would suggest to someone who is at 30 years of age, has a retirement to accrue some amount at the 50? When should he go for equity? When should he not go for equity? What is that age gap? What are the parameters that you typically assess while doing that financial planning and a progressive asset allocation?
So at when you start early, so again it's a person to person, more of it. There is no fixed rule, but definitely there are some parameters they should follow. Take an example: if you are in early 30s and you are a first time investor in the market, you should start with a 70% in the volatile asset class. That may be equity, that may be a property, that may be in the commodity. Then 30% in the fixed income. As they saving that money, they can invest this money and do rebalancing according to the market situation.
Okay.
So as they go near their retirement, 5 years at least before or 3 years before, they should come into the fixed asset class, which may be a fixed income product like FD or a cash, which ensure that money should be available. It should not be erode for any kind of volatility in the market or product.
Fantastic. I think going forward, definitely. Now going slightly on top of this, what are the top 5 suggestions that you have for, again, the same person who is 30 years of age today and is thinking of the financial planning or understanding that personal finance is a subject that he or she should care about now? What are the top 5 things that you would like to tell them, which are like basics of personal finance?
Absolutely. So those who are at young age, and normally now younger people are making money more than his father's income. They try to spend money more rather than a saving. So first, have at least 20 to 30% of their income should go for saving, and that saving should start with a emergency fund or a contingency fund, which help them any kind of job loss or any kind of mishap happens in their life, so they can use. So that vary from person to person, but at least 6 months to 1 year they should have having a contingency fund, which ensure any kind of job loss or hospital expenses that can take care. And due to now AI and job loss, people are not should not be worrying about the 6 months. So you can learn anything in the 6 months or 1 year and again more one job due
Fantastic,
to this.
Yes.
So that you should have. Then have a health insurances or a risk planning properly, which covers life insurance, health insurance, accidental insurance, any critical illness, that you should have. Then third, whenever you do investment, set a goal and then only invest, because without setting a goal, investing is like you are sitting in one bus, which where it is going you don't know.
Okay.
So end up going where driver wants to go. So their purpose, not your purpose.
You are not driving it, somebody else is driving, you are just
sitting. So ensure that you should invest with a goal, not others' goal, whatever you are like, and that goal may be changing, but start with your own goal, and then you start for a retirement purpose. Avoid buying homes at early stage due to peer pressure or advertising we are seeing on the road, buying a home or so why? Because if you stuck in that asset class, you can't out immediately, because you have liabilities, you have expenses done, and maybe sometimes I have seen there is due to marriage pressure they are buying these. But having home and which ensure their marriage will be done, this is a wrong belief that you have. If you have that, once you buy a home, it's a liability for you, and you come into the rat race where you cannot come out, because you can't leave the job. You have always a pressure of
paying EMIs.
Paying EMIs. If you are not liking that job, still you are doing that job because of paying a EMI. It's like a daily death of your working. So so you should avoid this. Focus on your passion, give some time, and definitely you will make money. You will also buy after 15 years. Also, you can definitely buy a home at a one short income. Also, if you focus on that, but you live your day properly, love what you do, and this happens only if you don't have any commitment in terms of liability. And for avoiding, if you are making good money, have a SIP. First, do one whatever EMI where you are going to pay, do SIP of that EMI and stay invested. 5 years, if you are making continue that 5 years, definitely you will buy that home. There is no FOMO concept that normally broker or agent do कि ये property बढ़ जाएगा इसलिए अभी लेके जाओ. So you should avoid these things.
Fantastic. I think I would say genuinely for every 30-year-old, matlab for someone like me also, this is very much fantastic suggestions that I should implement definitely. So thank you Nitin sir for again doing this for us and our viewers definitely. And it was really great talking to you about something deeper as asset allocation, because it is today's thing that everybody wants to go for only single asset class, and that is where they don't understand the diversification, the fundamental rule of investing, which is about diversification. And we talked about that, so thanks a lot for that. And also thanks for sharing the 5 important things that everyone when they are starting their personal finance journey should be starting with. So thanks for that. And would love to understand from all of you also, what are the other things that you want us to cover with the financial planner and the registered investment advisors like Nitin sir. Put anything in the comments. We are all ears, and we would love to cover that in all our next podcasts. Thank you.
Thank you.